You're probably missing one of the biggest investment shifts happening right now. Because while everyone's eyes are glued to the Fed, the NASDAQ, or inflation in the West, the ultra-wealthy are moving billions somewhere else. To BRICS. Brazil, Russia, India, China, South Africa, and now possibly Saudi Arabia, the UAE, Egypt, Iran, and even Argentina. In 2025, this isn't just a political alliance, it's becoming a parallel system, a challenge to the dollar, to Western-dominated markets, and even to the global order we've known for the past 80 years. At the end of this video, you'll understand exactly why billionaires are quietly reallocating capital toward this bloc, how it could reshape everything from commodities to currencies, and how you can position yourself before the mainstream catches up. Let's start with the big shift. When BRICS first launched in the 2000s, it was mostly symbolic, an acronym coined by Goldman Sachs to group high-growth emerging markets. But today, it's grown into something real. Real trade, real alliances, real economic power. Together, the BRICS nations now account for over 32% of global GDP in PPP terms, overtaking the G7. And their share is growing. China and India alone are projected to represent over 50% of global growth in the next 5 years. That's not speculation, it's IMF data. And it's not just about GDP. BRICS countries now dominate global commodity supply. Brazil is a food superpower. Russia holds massive reserves of oil, gas, and fertilizers. South Africa controls critical minerals like platinum. China leads in rare earth metals and manufacturing. India is now one of the largest software and service exporters. This gives BRICS leverage in a way that the West can't ignore. But here's the part that really matters to investors: the movement toward de-dollarization. For decades, the US dollar has been the default for trade, for debt, and for reserves. But BRICS is changing that. China and Brazil are settling trade in yuan. India is using rupees with Russia. The UAE is in talks to denominate oil sales in local currencies. And in 2025, BRICS is advancing a joint payment system, possibly even a shared digital currency backed by commodities like gold. That could radically reduce the demand for dollars worldwide. And that's exactly why hedge funds, sovereign wealth funds, and family offices are paying attention. Ray Dalio, the founder of Bridgewater Associates, has warned that the US empire is in relative decline, and that investors must look beyond traditional markets. He's increased exposure to Asian assets, gold, and inflation hedges as a way to prepare. It's not about politics, it's about cycles. Economic power is shifting, and capital is flowing with it. In the next section, we'll look at what specific assets the rich are buying in the BRICS world, and how they're structuring these bets for maximum upside. Because this isn't just a story about countries, it's about commodities, currencies, and control. The ultra-rich aren't just watching BRICS from the sidelines. They're buying land. They're investing in infrastructure. And most importantly, they're shifting into commodities and currencies that are deeply tied to BRICS growth. Let's break this down. First, commodities. BRICS countries control a staggering portion of the world's natural resources. In fact, as of 2025, BRICS members, including new candidates like Saudi Arabia and the UAE, account for over 40% of global oil production, 60% of rare earth metal reserves, more than half of the world's fertilizer supply, a significant share of global grain, gold, and industrial metal exports. This isn't just economic trivia, it's strategic dominance. When Russia was cut off from SWIFT and faced Western sanctions, it didn't collapse. Instead, it reoriented trade toward Asia, especially China and India, using yuan, rupees, and gold. In response, wealthy investors started buying what these nations rely on: energy, agriculture, and metals. One example? The Invesco DB Commodity Index ETF saw a surge in high net worth inflows in late 2024 as BRICS countries ramped up commodity-backed trade mechanisms. But more than ETFs, they're going straight to the source. Private equity is funding railroads across Africa and Asia. Family offices are buying stakes in lithium mines in Brazil. Gulf sovereign funds are pouring billions into ports, refineries, and farmland in the global south. These moves aren't speculative. They're strategic hedges against a future where the dollar isn't king. That brings us to the currency play. For decades, the smart money held most reserves in dollars, euros, or pounds. But in 2025, we're seeing serious diversification. Central banks from China to Egypt are increasing gold reserves. In fact, 2023 and 2024 marked record gold purchases by central banks, most of them from BRICS or BRICS-friendly countries. Why? Because gold is the one asset that can back a currency without relying on the US financial system. Now, BRICS has openly discussed a shared currency that's at least partially gold-backed. It won't replace the dollar overnight, but it could become the preferred option for trade between BRICS members. And that would instantly create demand for gold, silver, and non-Western currencies. Which is why billionaires like Stanley Druckenmiller and even Elon Musk have publicly talked about reducing dollar exposure and increasing holdings in tangible non-fiat assets. They're not predicting collapse. They're preparing for a multipolar financial system. The message is clear. Western markets will no longer be the only game in town. In the final part, we'll explore how you, whether you have $1,000, $1 million, can take smart, diversified steps to benefit from this shift. From ETFs and emerging market funds to real assets and inflation-resistant plays, we'll show exactly what to look for before this becomes front-page news. So, how can everyday investors position themselves for the BRICS transformation without needing billions or insider access? It starts with understanding the three core pillars that the rich are using to build exposure: emerging market equities, commodities, and alternative currencies. Let's begin with equities. BRICS markets are volatile, but they're also undervalued compared to the US and Europe. According to MSCI data, the emerging markets index trades at a forward PE ratio of around 11 compared to 1921 for the S&P 500. That means investors are paying nearly half the price for the same amount of earnings. Funds like iShares MSCI Emerging Markets ETF, EEM, or Vanguard FTSE Emerging Markets, VWO, give you access to companies in China, India, Brazil, and South Africa, some of which are dominating sectors like fintech, green energy, or digital infrastructure. And for those who want more targeted exposure, look into regional ETFs. FLIN for India, FXI for large Chinese companies, EWZ for Brazil. These aren't moonshots. They're long-term bets on population growth, rising middle classes, and the realignment of global supply chains. Next, let's talk about commodities. If BRICS builds a trading system based on physical resources, owning those resources becomes a financial advantage. Gold is the obvious choice and still one of the most powerful hedges against currency debasement. You can gain exposure through SPDR Gold Shares GLD, iShares Gold Trust IEU, or even physical bullion stored in non-US jurisdictions. For broader coverage, consider the Invesco DB Commodity Index, shout DBC, which tracks a basket of energy, metals, and agricultural assets, all directly influenced by BRICS trade dynamics. And finally, alternative currencies. Most retail investors can't hold Chinese yuan or Russian rubles directly, but they can hedge dollar risk by owning gold, again, a store of value across all monetary systems. Bitcoin, which some institutional investors now consider digital gold. Foreign currency bonds or money market funds, especially in countries like India, UAE, or Brazil. Even Ray Dalio's all-weather portfolio now recommends exposure to assets that perform well in inflationary or deglobalizing environments, a category that BRICS clearly supports. But here's the real secret. You don't need to bet everything on BRICS, you just need to stop betting everything on the West. Because for the first time in a century, the global center of gravity is shifting, economically, financially, and geopolitically. If you want to protect your wealth, if you want to grow your portfolio in the next era, you need to follow the flows of capital, not the headlines. And the flows are heading east and south. So we've covered what BRICS really is, why the rich are moving money there, and what tools you can use to follow that trend. If you found this valuable, hit that like button and subscribe for more global investing strategies. And tell me in the comments, would you trust a BRICS-backed currency over the US dollar? Why or why not? Because this shift is happening now, and those who move early always win bigger. The sooner you adapt, the sooner you thrive.